Hello traders. Most of the traders lose money because they are not able to understand the market, where to take the entry, where to exit, how the market works, what is the market patterns, what is the support and resistance, and then what is the liquidity areas. This I'm going to explain the short reversal, how it can be taken and the timing of it and the volatility and how it can be taken and all. I am going to explain this. First, I want to understand where to take the entry. Before that, we need to understand how the market reacts and how the buyers and the sellers are executing the orders, where the pressure is, how the pressure is, that we need to understand. See, so here if you see, the market all the way has created one liquidity area and it pushed, and the whatever the liquidity is here, it has been taken. Then buyers are not able to sustain the market and the market fallen down. Here the support, wherever the resistance was there, that acted as a support, but however it is failed to hold and it just pushed back based on the volume. We can see here the volume here, whatever is there. If you see here, the volume is falling and the market is not going. So the sellers are absorbing the market and then again the market is fallen down. So this is the liquidity area. I can say how we can take the entry, that also I'm going to volume profile look like the till the point where the till the point. This is the area, high volume node. I can say this is the high volume node, high volume node. First, draw the volume profile highest of the highest previous high till the last bearish candle in 5-minute time frame. It should spend a reasonable time above the 50% area at the premium. That is the premium area. This should be fast fall to sweep the liquidity of the previous low. Previous low can be of the previous day or previous week low or the previous low just before the that move, and then mark the liquidity point of the previous low and then measure the price range from the previous low liquidity area to the next low area and check the passive buyers activity who stepped in the stop the market. And it should be very quick, and it should be very quick and have a limit buy order at the price where it is required fair value. This is the area. Now coming to the point, in liquidity sweep, if you see the market from here, the timing, this is in the New York session. This is in the New York session. If you see this, the market has fallen down very sharply. If you see from 1857, that is New York session, aggressive buyers, aggressive sellers, passive buyers, aggressive buyers. How this activity happens? First, we will understand what is passive buyers and aggressive sellers. In this case, buyers and then aggressive sellers. We need to see from here all the aggressive sellers have been hit the market, which means market order have been executed all the way till this liquidity area. So this has been taken. This has been taken. And if you see in 1 minute time frame, I just want to show it in the 1 minute time there. If you see here, at the liquidity point, the passive buyers means the waiting buyers who are taken the limit orders at this area are there, and the market pushed down, which means the market has taken all the buying passive stop orders of the passive buyers have been taken, and this is created a little buying activity which stopped the falling of the market at this area, and still it is further fallen down, which means we can simply say market all the way it is sharply fallen down up to this area, and this is the high volume node, which means wherever the market has created the imbalance, that is fair value gap, when it is created, it definitely have to cover the all the whatever is there, imbalance have to be covered. So we will be looking at this area. So market has fallen down till this point and it has taken all the liquidity, and the passive buyers have stopped the market falling market has stopped, and then we are going to see how we can take the reversal, short reversal, how we can take. So once this is market fallen and when the liquidity has been taken, so we will be looking at this area. This is the area limit buy we are going to take from here. Why? Because if you see in the first 1 minute time frame, passive buyers have stopped the market and it is fallen down, which created here is the more buying activity. So from this point, in the first point, from the first point, I'm going to take a limit buy all the way up to here, or you can even we can even see up to this point, high volume node, wherever it is, till that area we can see. And what is that value, what is the value we can take? We see once the market has fallen below this, and we have 1 2 and 3 minutes time. In 3 minutes time, what all we can do is the question. In the 3 minutes time, we should understand the market has taken the liquidity. Here is the here is the high volume node. So we should think the market is going to reverse, but how the risk reward and all, how we can calculate and all, we have to be attentive from this. When the market fallen below this area, so we should be more attentive. So we should draw a line from here. This is the area. From here we have to take the entry, and then we have to measure how much is the gap between this point. So there is a 3,500 3,500 pips, means $35 move in gold is there. But still, how risk we need to calculate, how we can take this risk and all, we need to understand. So I'm gonna take from here limit buy and take all the way. This is the one stop entry, I can say. If you want, if you ask me, I can, maybe I'll close a 50% of the order at this point, which is giving me a 17.8684 dollars. That is 17,800 1784 pips more I'm gonna take. So 50% of the orders I can close here, and markets sharply come back. It is just a reaction and it will go further. This is the high volume node, and it has not taken the further liquidity which the market to push down. So definitely during the New York session, once it fallen down and taken the liquidity, and it will definitely move back to the magnet area and take the liquidity which is above. Maybe after that it may fall down. And and so from here we need to see how it can be taken. So all the way I have taken here, giving me 1 is to 3.1 ratio, and one more entry if you ask me, I can take once the sharp reversal, and this is the area. This is the mac. This is the buying area. Market buyers are buyers are participating in this area. So I can take from here, putting a stop loss order up to here. I can say putting a stop loss here, putting a stop loss here, which is giving me 1 is to 6.88, which is a very good. One more entry I can show you on the gold. This is the Monday low. This is the Monday low. This week low 5647, and it was taken the liquidity, which means usually the liquidity areas are previous day lows, previous day highs, and then a week lows, last week lows, highs, like this it will be there. So if you see here, this is the liquidity point, and it has taken all the liquidity. It has taken all the liquidity during the New York session on Tuesday. On Tuesday, it has taken all the liquidity, I can say. And I want to draw from the first point. This is the first point where from where the liquidity want to show how we can take the entry. Also in this case, once the liquidity has taken, and if we see for the in 1 minute time frame, this way we can use and we can take the entries. We can have from here limit buys. Once the market fallen down, limit buy. And if you ask me where based on the volume profile where the high volume node is, this is the high volume node. This is the point. I can say first 25 about 25 a $26 move is here only. This is the very huge, very show it in the long long position. From here I can show you, which is giving me first itself it is a 2.26 risk reward ratio. From here we can take, this is after taking the reverse, after taking all the liquidity of the previous day or this week low in the New York session, and we can take a limit order, limit buy from here till this. Or we can even execute during the market with the market execution we can take with having a risk reward ratio 2:61. Why and how we can take? As I said, I have set a certain set of rules how we can take the entry. That is, first draw the volume profile highest of the highest previous high till the last bearish candle in 5 minute time frame. It should spend a reasonable time above the 50% area at the premium. That is the premium area. This should be fast fall to sweep the liquidity of the previous low. Previous low can be of the previous day or previous week low or the previous low just before the that move, and then mark the liquidity point of the previous low, and then measure the price range from the previous low liquidity area to the next low area, and check the passive buyers activity who stepped in the stop the market. And it should be very quick, and it should be very quick and have a limit buy order at the price where it is required.